comment. So I mentioned PayPal in another video and somebody had a comment about it, so I will mention it again. Whenever you're trying to decide if something's expensive or not, you should always ask compared to. So your default option should always be to just invest in the S&P 500 and in low cost index, dollar cost average, and then you'll tend to do fine. And sometimes it will get overpriced, such as during the dot-com bubble here in 1999, or here after the great financial crisis, but this is mostly because earnings of companies collapsed, not stock price. So we're not as high as we've ever been, but currently it's trading at about a PE of 31 if you include every company in the S&P 500 and weighted capitalization. And the average is usually 15 or 16, so at 31 times, that seems kind of high, even with interest rates the way they are. If your other default option is to invest in the S&P 500 at 31 times cap-weighted earnings, and it includes companies that don't have any earnings, and companies like Tesla that are trading at 200 times earnings, or Palantir that's like several hundred times earnings and are ridiculously overpriced, or you can find cheap companies that are trading at 6 times free cash flow like Croc. I would rather pick some individual ones, and PayPal is one of the ones so on a trailing basis, the past 12 months, it's trading at less than 15 times earnings. And on a forward basis, what they expect to earn next month, it's trading at about 12 times earnings. Again, compared with the default, which is trading at 31 times earnings, which is the S&P 500 in a low-cost index. Is this a melting ice cube? No. Revenue seems to be going up lately, and earnings growth are going up lately. It hasn't done well since the IPO, but lately it seems to have turned the corner and things look promising. So if you look at the all-time chart, it was spun out from around 2016 and then had a really good run, making it up to almost $300 a share. And then the price collapsed. So people were stuck at home around here, buying more stuff online, which helps most of the payment processors, including PayPal. And as that trend reversed and people started doing stuff in person, it seems to have collapsed from 300 down to where it is now, 74. I started buying about 10% below that. So I had sold a bunch of puts on this, and it stays above that price, it's free money for you. If it sells below that price, they assign you the shares and you have to buy them. But I kind of like this company, so I think it'll do well, and I'm holding. One thing I did is I sold some puts and I used it to buy some calls. So you can actually buy calls on this up to 2028. I think I bought a couple of these calls, which $7 and something at the time, and now they're $12.94. So it's doing pretty well. I wish I had bought more, but I'm semi-retired, so I don't have a regular paycheck coming in anymore. However, what's good, bad, and the ugly about PayPal? So the good, compared to your default option, it looks like it's about half as cheap. Unlike other melting ice cubes, this took a few hits, but year over year, the revenue and earnings are going, and they're buying back shares. So one of the negatives is I usually like to see insiders buying because they know more about the company than you do. But here, all the insiders, including this year, seem to have been selling. However, some very good value investors are buying, including this guy. Is very interesting, Norbert Liu. If you Google Norbert, you will find out that you can't even find a picture of him online. He was somebody who impressed legendary investor Joel Greenblatt and gave him some of his own money to run. And Norbert Liu will sometimes have a portfolio with 3 stocks or 4 stocks and will go sometimes 2 or 3 years before he buys anything. And last quarter, he bought 3 things. He added more to Pinduoduo, which is the parent company of T, and also bought Crocs and PayPal. So I discussed Crocs, which I like a lot. Pinduoduo, I've looked in the past, and sort of gave it another look to see what he sees. But Crocs, I was definitely impressed by. Crocs, I had been using it as a trading sardine and buying it anywhere from 98 to 100 and selling it at like 107, 108, and it just kept trading in that range. But the current price is less than $80, so you're buying it for cheaper than a legendary investor here. And ditto for PayPal. I got about 10% less than today's price, but even if you get it at today's price, you're buying PayPal at the price that he owned it at the end of the last reporting period. For someone who, one of the greatest investors of all time, gave some of his own money to manage because that's how much he trusts his judgment. So what are some good things about PayPal? If you think about the world 5 years from now, do you think people will be buying more things or fewer things online? Is probably more. I still use a physical credit card, but increasingly I use my Google Wallet and just tap the phone. So increasing fintech companies like this are going to get a bigger share of the pie, in my opinion. And this isn't investing advice. This is just me walking through my process. Don't buy anything because I own it, or don't sell anything because I'm selling. Do your own research and try your best to understand the company. So PayPal bought a competitor, Zoom, which allows you to send money internationally. PayPal is very common peer-to-peer company in the US sending money. Where they sort of stumbled was there are companies like Stripe that gained a lot of traction targeting websites and businesses that honestly PayPal should have got. But PayPal is making inroads in that area. And they also have Venmo, which is not intended for commercial transactions. It's intended for you to send money to your friends. And you can send money through PayPal, you can send money through Venmo, but for some reason you couldn't send money from PayPal to Venmo until now. And that is one of the things I think which will continue to help it grow, is that seamless transactions. You can send somebody money from PayPal to Venmo or vice versa. So it eliminates the needs for multiple transactions. As I said, online commerce should get bigger. It's trading at a lower multiple than your default option, which is the S&P 500. And there are nice buybacks going. So from 2023 to 2024, they bought back 6% of the shares. And from this time last year, they bought back 6.5% of shares. So if you look at it from the beginning, as I said, they went public in 2014. They were spun off eBay. It used to be one company and they split it into two companies. And this is the share count. And they haven't diluted like other companies where they issue more and more shares. They do the opposite. They either don't do anything or buy back shares. And as you can see, in the past couple of years, the share buyback has really accelerated. So if we look at this from 2022, so if we look at the 5-year chart from 2020, they had this big spike. Their stock price, because of online spending from COVID, that leveled off. They didn't issue any shares. The stock price went down a lot. So what do? They just keep buying back shares and buying back shares and buying back shares. And one of Norbert Liu's big home runs, which was a huge multi-bagger, was a company called NVR, which was home builder, just like any home builder, but they had two things which made him interested in it. And one is that they would purchase land with options instead of buying the land outright, so that in a downturn, they weren't trying to sell land at fire sale prices. They had good cash management, and also that they were continually buying back shares. And buying back shares when your stock is down is very accretive to earnings in the future. So as you can see, not much action here, but about 5 or 6% stock buybacks. And in a few years, you're going to buy back a big slug of it at depressed prices, and that should help you. And if this were a melting ice cube, that might not be enough, but it is growing. The stock price is low. They're buying back shares. And so that's a lot of good things all in one place. So I have not much, about a 1% position on this. And I think I have 2% on crop. But it takes a lot to get me to buy something these days because I'm much more conservative and I like where this is going. I like the pricing. And in addition to the position I have, as I said, I've sold puts and I bought calls, and I don't count that in the percentage I have, but those are doing very well. And again, this is me just walking through my process. I'm not recommending to buy or sell, but it is something that's interesting if you want to take a look at. And if you want to support the channel, just like and subscribe. It helps with the algorithm. And there's a Buy Me a Coffee link if you want to help that way, but don't feel like you have to. And if you have any questions about this or another stock you'd like to see, just put it in the comments. Have a great day, everyone.